The new Reserve Bank Governor, Michelle Bullock's first RBA meeting is done and dusted. The economists were divided. They weren't sure if it was going to be on hold, going up, or what was happening. But the news is out. The Reserve Bank has decided to hold rates for another month and just to wait and see. So was this a bit of a kick the can down the road sort of decision, or is it actually timely? Are there parts of the economy hurting? We're going to dive into that in a lot more detail in this video. So start us off.
Yeah, well, let's take a look at the key takeaways. The first is that this is a fourth straight month that the Reserve Bank has decided to hold the cash rate at 4.1%. And this offers a bit of a breather for borrowers. Borrowers have been hit hard in the last 18 months with over a 4% increase on the cash rate, which nearly tripled a lot of the repayments for borrowers pre the rate rises. So certainly going to give a bit of a breather. Jaden, what does this look like for the uncertainty in the economy?
Yeah, there has been a bit of an uncertain landscape. There is some increasing in certain sectors. Been talking in the IT industry, where there's a bit of softening in the labor markets there, and people aren't sure what's happening going forward. Obviously, there's inflation concerns. The cost of living has gone up and up. Petrol prices was one of the things they flagged as has hit over $2 a litre across Australia, and the governor's actually kind of, I guess tried to scare people, whether or not it's jawboning. She has hinted in saying that there is room for future rate rises, that inflation is higher than where they'd comfortably like to see it. And sometimes they say this is just them trying to spook the market and trying to front run and say like, all right, everyone, we're going to put the rates up more. You need to spend less. But there seems to be genuine cause for concern out there. There could be future rate rises on the horizon.
Definitely. And even with over 50% of economists that were surveyed, they're all expecting at least one more rate rise this year, especially off the back of what the Reserve Bank governor said. We've seen a lot of the big banks sort of predicting similar things and saying there's probably one more rate rise in there.
Yeah, so NAB was probably the only one out of the big four that was saying that the cash rate was going to peak at 4.35%. CBA, Westpac, ANZ were all saying 4.1 is as high as it's going to get. But what this, the latest rhetoric out of Reserve Bank has brought forward or has changed is the rate cut decision landscape. A lot of those economists surveyed were predicting that the rates could start falling as early as next year or potentially August next year. Some of them actually pushed that back and said, well, it's actually going to take longer to get this inflation down. It potentially means that rates are going to stay a little bit higher for longer to combat that.
Now, since the rate rises began on May last year, an average mortgage of $500,000 has seen an increase of over $1,100 in their monthly commitments compared to this time, compared to May last year. So huge increases for a lot of borrowers out there. This recent rate pause will give a lot of reprieve for those that have been struggling with cost of living and elevated mortgage repayments.
Now, we still saw auction clearance rates pretty high, pretty elevated over the long weekend with all the football finals. So property prices haven't been affected, I guess, as much as probably what the Reserve Bank, and obviously it's not their mandate to affect property prices, but they are doing a bit of a wait and see. There are other parts of the economy. There's others, talk of a per capita recession, saying that the economy is actually shrunken in certain sectors, and it's only been sort of pushed over or glazed over by some of these inflation figures that are sort of not inflation figures, sorry, but immigration figures rather. People are coming across, filling the jobs and keeping the economy moving. So what are you saying?
Definitely. And also I think with property prices, the reason we haven't really seen them soften up too much is because there's not a massive amount of supply coming on the market. Yes, there's a lot of people that have fixed in at ultra low fixed rates. We're finding a lot of them are either opting to refinance, find a better deal, or some of them are even selling and upgrading or selling and downgrading. So the lack of supply available is certainly holding up prices. Jaden, I guess, is there any closing remarks? The Reserve Bank's held things for this month. We've seen borrowing power come down. Is there anything for those borrowers out there that are keen to get into the market on ways that they can increase their borrowing capacity?
Yeah, I think definitely the Reserve Bank governor, although they've said rates could go up again. From what we've seen for previous governors, this is just a way of them trying to scare the market, get people to sort of pull in their coat pockets, stop spending a little bit, and hopefully that'll have its way of reducing those inflation numbers there and sort of keep the economy going on. I suppose if you are borrowing or you're looking at buying a home, the good news is even with those forecasts, there could only be one interest rate rise left, if any at all, if they get that right. So we are very close to the top. So it doesn't look like rates, repayments going to increase another $1,000 like they did year on year for the average sort of mortgage holder there. And I think, the ways that you can sort of look at increasing your capacity, if you are finding that you're not quite getting the home you want, or you're sort of struggling with your cash flow, or looking at, sit down with a mortgage broker. That's what we do. We'll sit down with you, run the figures, look at what credit cards, personal loans, car loans, things like that are going to change. Even overtime's a big one at the moment.
That's exactly right. You can reach out with us directly at huntergalloway.com.au or call us directly on 1300 088 065. Guys, we'll see you next time, and thanks for watching.